You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. Time to kick off a brand spanking new trading year. Yes, a new year here, 2025. For TWIFO, my name, of course, Mark Longo from theoptionsinsider.com, and coming to you on this same network now. 18 years. This is our 18-year anniversary. January of 2007 is when this whole kit and caboodle kicked off. You had to have an RSS reader to get the shows. There was no iPhone. Maybe if you were hardcore, you could get it on your, iPod if you knew how to play with that stuff. Obviously, that's where the name comes from in terms of podcasting. But just wild to think we've been running this long. Back then, no one even thought anyone would even care about finance on this medium, let alone options. And here we are, well over a decade later, a dozen or so shows, millions upon millions of downloads. We thank you all, listeners, for making the network what it is and what it has become, and all the new folks joining all the time. We appreciate you all out there, however you engage, downloading, listening, streaming, subscribing, engaging on social media, whatever you do. We appreciate you all out there. Hope you're having a great start to your new year. Hope you had a good 2024. Speaking of 2024, let's get into that now with some epic lookbacks in our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything moving to the light side, aka the upside, and to the dark side over there at CME. In this case, over the past 2 weeks to start, of course, we were off for the holidays recently, so we're going to go back 2 weeks to kind of wind up the year here for TWIFO. Then we're going to get to some look backs on this wild, crazy year that was 2024. But let's kick it off, finishing up the year here, the final couple of weeks here, listeners. What were the big movers and shakers over the final 2 weeks of the year? it was, in spite of what you heard in the headlines, especially in the equities, it was kind of a blood red last couple of weeks out there to end the year. But overall, looking at the products going up at CME, it was decidedly bullish the last couple of weeks. I would say we're pretty much 60-40, maybe 65-35 green over red over the entirety of those 2 weeks. And you know what? To end things up for the year in an optimistic fashion, let's do the top 5 first, the light side first, then we'll go to the dark side. The light side, number 5 for the final 2 weeks of the year, listeners, was the energy sector, up 5.45%. Again, that's the energy sector of the S&P 500. That was number 2 in the other direction 2 weeks previous, off 7.11%. So getting back almost everything that it gave up. Number 4, heating oil on the rampage, up nearly 6%, 5.89%. Number 3, RBOB. I see a theme here. RBOB up 7.7%. Then from the energy, we go to the ags, in particular the dairy, listeners. Class 3 milk up 9.06%. And we're finishing off the light side for the year up 9.64%. Again, for the final 2 weeks of the year. Soybean meal up 9.64%. Now to the dark side, the final 2 weeks of the year, we have number 5, the Mexican peso, off 2.31%. Number 4, it was another couple of rough weeks for rough rice, off 2.85%. Number 3, to the livestock we go. It is lean hogs, off 3.44%. And then number 2, it is lumber, off 3.8%. That was number 3 in the other direction 2 weeks ago, up 2.27%. So giving all that back and then some. And the number 1 dark side mover for the final couple of weeks of the year, oats, off 6.61%. It was number 1 in the other direction 2 weeks ago as well, up 6.56%. So giving back pretty much exactly what it gained a couple of weeks previous. So interesting return to form for those last 2 there, lumber and oats. They were big movers during a lot of the pandemic years and have kind of quieted down. Maybe they're coming back to the forefront out there, which would be interesting. But you know what else is interesting, listeners? It's that time. It's the start of a new year. It means it is time to look back on the madness, the insanity, just the head-scratching activity that was 2024. Let's kick it off looking at an epic movers and shakers for the entire year. What was lighting up the light side and the dark side over the course of the entire year at CME, listeners? And again, if you have the premium tools over there at Bantix, you can run this report for yourselves over there. But if you also follow us on social media, we tweeted out right before showtime, listeners. It was a wild year over there at CME from a moving and shaking perspective. And looking at this chart, it is almost equally split. It is pretty close to 50-50 green versus red. Maybe ever so slightly biased towards the green, maybe 55-45. That said, the largest percentage mover of the year was to the light side. Can you guess which one? You probably can guess if you think about it. I'll give you a little time to think about that because we will start to the dark side. Our dark side bottom 5 listeners for the entire year. That was 2024, the biggest percentage losers there at CME for the year list. What gave up the most? Let's see. Number 5, to the world of FX we go. It is the peso USD, listeners, off 18.69% for the year. So a rough year for those folks hoarding those pesos out there. Number 9, from the world of FX, we go to the world of metals. It is one of the P names. Can you guess it? Think quick. Nope, not platinum. It is the other one. It is palladium, off 19.07 for the year. This is on the heels of topping our list to the dark side for 2023, off 42.2%. So it has been just an apocalyptic couple of years for palladium out there, which is kind of fascinating when you think about it, because it's been a pretty good run for the shiny stuff for a lot of this year, but palladium not getting the memo, listeners. Number 3, was it a rough year for rough rice? The answer is decidedly yes, off 19.1% for the year out there. Keeping it in the ags for number 2, listeners. Soybean meal, off 19 0.3%. And the big dog loser, the number one dark side mover and shaker for the entire year over there at CME for 2024. Our old pal soybeans keeping it in the ags, off 22.57%. So in general, a rough year for ags, rough rice, soybean meal, and soybeans leading the charge to the dark side. A little bit of metal sprinkled in there and a little bit of FX for good measure as well. All right, to the light side, top five we go. Did you do it? Did you guess the number one light side mover for the year? If you think about it, you probably can get there, especially in the last month and change. Hint, hint, post-election. It's had a good run. All right, see if you can't get there by now. Number five, listeners, if you go off to the financial sector of the S&P, had a great year, up 28.83%. Even with some of that give back, that pullback at the end of the year, the financial sector still making it into our light side top five for the year. Number four, to the shiny stuff we go. Forget about all that palladium noise, listeners. It is gold, up 29.06% on the year. So a good year for the big dog of the shiny stuff, even again with a little bit of pullback towards the end of the year, still ending the year up strong, nearly 30% for gold. That's a banger for all you gold bugs out there, listeners. Number three, keeping it in the equities. This time it is the communications sector of the S&P, up a whopping 33.82%. It was also number four in the same direction in our end of year awards last year as well, coming in at number four to the light side in 2023, up a whopping 45.61%. So my goodness, if you were just hanging out in that communication sector for the last couple of years, you've had a good run. Number two, you knew this one had to come in somewhere. This one has been the most frequent offender of the year. If there was a theme that was nigh on inescapable throughout the entirety of the year, some names came on strong towards the end of the year, but there was one name that was pretty much inescapable throughout the entirety of the year, week on, week off. This name was pretty much always represented. It was always having a big percentage move, which is a little bit easier for it, admittedly, because it is a cheaper underlying price, hint, hint. But it also answered with resounding numbers week in, week out. Well over 500,000, up to 1 million, 1.2 or more million contracts every week. It was just a banger every week. What am I talking about, listeners? It could be none other than our old pal Nat Gas. Coming in at number two. Something eclipsed Nat Gas. What could that possibly be? Number two, listeners, Nat Gas up 40.93% this year. It was number two in the other direction in 2023, listeners, off 33.3%. My goodness, exactly a third in 2023. So after giving back all that juice in 2023, Nat Gas getting frothy. A lot going on in the world of Nat Gas, which is why it's been on the show pretty much week in, week out. If you had to have a theme, it was the year of Nat Gas. Nat Gas options for sure. But yet only number two, listeners. What could possibly surmount the seemingly insurmountable Nat Gas? Listen, what could do it? I gave you a lot of hints early on. It's had a great run post-election. What is it? Obviously, we know it's not the S&P. That's not topping Nat Gas. What else has had a good run post-election? How about your old pal Bitcoin? Yes, just a rock'em sock'em robots year, up 113% this past year. It's been a good couple of years for Bitcoin. It finished the year of 2023 up 164%. So been a good couple of years for Bitcoin coming out of the depths of crypto winter out there. And of course, the last month and change just really lifting Bitcoin to obvious record highs. It would have been nice if we saw some commensurate options paper to go along with that. Alas, we did not. We struggled to really feature it on the show just because it's hard to get excited about 800, 1,000 contracts a week. Even the micro is not putting up the numbers, listeners, but moving and shaking is what we're talking about here, listeners. Nothing topped Bitcoin this year to the light side or to the dark side. Did you have that as your king of the movers and shakers? You probably did if you were paying attention, but I gave you some time to get there on your own, listeners. Let's look back at the year that was now as well from a CVOL perspective. Remember, you can run all these reports for yourselves, listeners. CME Group and CVOL. Type that into any browser on the planet. That'll get you to that dashboard. This time, we're changing it up. We're not going back 1 week or even 1 month or even 3 months. We're going back an entire year. What was the entire year like, moving and shaking wise, from a CVOL perspective? It was a pretty wild year out there, listeners. You know what's going to top our list. Nothing can really compare with the Treasury yield volatility coming in right now to kick off the year, 116.49, kind of unched today. That also puts it, let's say, the lower third or so of its range for the year. The range for the year, pretty wide, 90.42 to the dark side and 169.23 to the upside. Again, hanging out right now in the lower portion of that range at 116.49. Below that, we have the FX CVOL. Again, these are ordered by their movement for the day, listeners, not by how they stack up for the year. That's just how the CVOL system works. FX coming in right behind it, listeners, 9.26. Again, kind of unched today. It's had a good range for the year, though. 572 was the low for the year. The high, 9.66. So pretty close to its high for the year right now at a 9.26, only off 0.4 from that high. So that's a pretty wide range for FX CVOL, all things considered. If you know much about FX, you know it's kind of the complex where vol goes to die. So seeing that wide of a range, nearly a 4-point range on the year, you know we had some action out there in FX. Below it, listeners, we have the Treasury price vol. Again, another complex where volatility usually goes to die at a 670 right now to kick off the year. Unched again on the day. The range for the year, though, more impressive. 5.27 to the low end and 10.37 at its upper bound. So a 5.1 point range on the year for Treasury price vol. That's nothing to sneeze at in the world of Treasury. So, you know, again, we've had some events this past year that were catalysts for this. Numerous Fed announcements, of course, the election, many other things, the meltdown for the yen carry trade, many things contributing to the wide range of vol we saw this year, especially in the Treasury complex. Below that, we have, of course, our old pal, the aggregate CVOL, 19.74 to kick off the year. Again, pretty much unched out there today. On the year, it's had quite the range as well, 16.93 on the low end, 24.78 on the high end, hanging out right now, like we said, 19.74. So at the lower middle portion of that range. Below it, we have the metals aggregate CVOL, 15.71. We just talked about the wild year that metals have had from a moving and shaking perspective, off a third of a point just today. So metals vol coming in pretty hard today. On the year, we've had an impressive range in the metals as well. 10.96 was the low, 23.2 was the high. So at a 15.71, we're hanging out pretty close to the middle of that range right now, listeners. So again, an impressive year from a metals vol perspective as well. Below that, we have the aggregate commodities CVOL, 39.65, giving up 3.25 points just today. The range for the year still hanging out pretty close, I should say, to its upper bound for the year, which was 42.9. The low was 28.51. So the aggregate commodities CVOL, in fact, if you add back pretty much what they gave up today, you would have been at their high range for the year. So giving up a little bit to start the year in commodities CVOL, but ending the year at pretty much a high note from a vol perspective. And at the bottom of our list is the aggregate energy CVOL. Now, the net number, 66.41, is one of the higher ones on our list. In fact, it's number 2 below the Treasury yield vol. But of course, this list, they group it by the day's move, and it's off 7.37 points kicking off the year here this year. So giving up a lot of juice. The high for the year was 73.78. So again, add in those points we just lost and you get to that high number. And then the low was 40, almost exactly 40.07. So quite the range in aggregate energy CVOL this year, listeners. About almost 34 points. 40.07 was the low. 73.78 was the high. Hanging out 66.41. So pretty much near the top end of that range for the year. So a wild year from a CVOL perspective. But you know what, listeners? It wouldn't be our end of the year look back extravaganza without some other fun data points to throw into the mix. This time of year, we always like to look back at a little bit of cross asset correlation, see how the assets performed against each other throughout the entirety of 2024. There's always some things you expect, but there's always some surprises from that data as well. Any nuggets to be found this year? Well, let's find out, listeners. Let's start with our top 5. Maybe let's expand that. Let's do like a top 7 or 8 positive correlations, because when you hear some of these, you're going to see, okay, a lot of these are as expected, but there are a few surprises sneaking in there as well. And then we have our own surprises this year as well, kind of just a separate category. Okay, let's kick things off, listeners. Let's factor this into the not exactly surprising category, listeners. Let's go to cash settled cheese. So going out to dairy first. Maybe you didn't have dairy in your list for surprises. That might be a surprise in and of itself. But let's go to the expected quote unquote surprise correlations out there, which is cash settled cheese versus class 3 milk. You expect a lot of intra-complex correlation, and you're certainly seeing that in the dairy complex. They moved at pretty much a lockstep this year, a 0.7 positive correlation between those two. So no real surprises there. Right above it in our list was the Russell 2000 versus the S&P 500. 0.75 correlation. Again, a pretty strong correlation, but not exactly surprising. If you know anything about Russell 2000, it kind of moved a little bit to the beat of its own drummer in the Q3 into Q4 of last year. So maybe that's why that correlation isn't even stronger. Above it, we have another intra-complex correlation you can kind of expect. Feeder cattle to live cattle. Pretty strong correlation, 0.76 over the course of the past year. So no real surprises there. One of the relationships a lot of people look at, which is also coming in at pretty much our close to our top 5 for the year, listeners, from a positive correlation perspective. It is silver versus gold. They moved at a 0.76 positive correlation over the course of the past year. Now, you know, if you listen to this show, you know there are moments where silver kind of did its own thing and gold did its own thing. But net on the year, they moved pretty much in lockstep, 0.76. There are a lot of people who watch that silver to gold ratio and that silver to gold correlation. It's an important indicator for a lot of you. Coming in last year, 0.76 to the positive side. That'd be fascinating if it was the negative direction. Not going to see that, I don't think, but interesting nonetheless. Keeping it in the, let's call it not surprise, intra-complex correlation category. We have now our actual top 5 for the year from a positive correlation perspective. We got the pound versus the euro coming in positive 0.77. Again, not a ton of surprises there. Number 4, we have the 10-year versus the 2-year moving even more in lockstep, 0.84 positive correlation throughout the entirety of 2024. Ticking it up a notch to number 3, listeners, heating oil versus WTI, so keeping it in the energy complex, 0.87 positive correlation there. Number 2, the 30-year versus the 10-year, moving pretty close to lockstep, 0.95. This is always fascinating to me to watch the different ebbs and flows of the different parts of the yield curve. You might think, given all the fixation on the 10-year, the 30-year might be a little bit different, but no. 0.95 correlation between the two, listeners. So something to bear in mind if you're looking at dipping your toes in the treasury complex. I know a lot of you hang out in the 10-year. Maybe you could start casting your gaze a little bit further down the curve to the 30-year. 0.95 correlation there. And that is actually equal. We have a tie for the number 1 strongest positive correlation of the year. You can probably guess what the other one is. Give you a hint. Another intra-complex correlation. It is exactly tied to the 30-year versus the 10-year. I'll give you another couple seconds. 3, 2, 1. Yep. It's the NASDAQ versus the S&P. 0.95 positive correlation for the year. So throughout this list, not a ton of surprises on the positive correlation. That's pretty much as expected. Let's get to the dark side now as well, listeners. And there are some surprises in here, including our number 5, listeners. Let's go to number 5. This is another one, another relationship a lot of people pay attention to. A lot of people talk about. They talk about one of these assets in terms of the other. Is this asset really just a digital version of the other one? Yes, I'm talking, of course, about Bitcoin versus gold. How do they stack up for the wild year that was 2024, listeners? negative 0.21 correlation for Bitcoin versus gold. So read into that what you will. We've had this debate many times. I don't think it's over. I know my thoughts on it, but people are going to keep weighing in on this, the Bitcoin versus gold debate. For me, that debate kind of had the nail put in the coffin back in the mad inflation years when we didn't really see Bitcoin keeping pace with gold and other assets during a high inflationary period, which if it was going to be digital gold, you would expect. So that to me kind of ended that argument. But for a lot of people, they still cling to it. And, this is a fairly close correlation, even though it is negative, all things considered out here. So if you're one of those ones out there still beating that drum for the Bitcoin versus gold, I'm not gonna yuck your yum, as the kids say out there. To each their own. As we keep on rolling out here to number 4, you can factor this into, I guess if you want to talk about surprising negative correlations, and we have more surprise correlations in a minute coming up, a separate category, listeners. But this one, kind of interesting. This was another trend for the year. Now, sometimes you have to be a little careful reading into these correlations because it's just 1 year after all. It's hard to draw a lot of meaningful statistical data from just 1 year. But still, it is interesting to crunch the numbers, see how things shook out. And if there was a theme to the negative correlations for the year, it was fixed income versus energy. And that they were pretty negatively correlated this year. Number 4, we have the 2-year note versus WTI at a 0.23 negative correlation. So coming in just a scotch above Bitcoin versus gold for the year. Did you have that on your bingo card for the year, listeners? There you go. Number 4, 2-year versus WTI. Keeping that trend alive. Number 3, it is the 10-year versus RBOB, negative 0.24. So pretty close. Neck and neck, these negative correlations, listeners. Number 3, 10-year versus RBOB. That means number 2, you can probably guess it, 0.25, the 10-year versus WTI. There you go, listeners. And our top negative correlation for the year, which again goes to show there weren't a lot of very strong negative correlations on our list for the year, listeners. We have the 30-year versus WTI versus crude oil, negative 0.27 out there. So fascinating stuff for the year. If you were searching for a lot of strong negative correlation, there you go, listeners. Unfortunately, or perhaps fortunately, depending on your viewpoint out there, not a ton of it to be found. Just looking really quickly. If you were looking right now, listeners, just running the numbers, because some people are probably going to write in being like, what was the correlation between the 10-year and the S&P? That's a big one for a lot of people out there. A lot of people put the 10-year in their portfolio against the S&P. That's their 60-40 allocation. They feel like they've done their business for the year, listeners. This year, the correlation, the 10-year note versus the S&P 500, it was a positive 0.04. That's wild. You're talking almost uncorrelated for the year. Kind of a weird one out there for all you folks leaning on the rates as your bastion of inverse or negative correlation out there. But I digress. Keep on going, listeners. Let's go out to some surprises for us on the year. Again, we just talked about one of them. Our strongest negative correlation for the year was actually the 30-year bond versus WTI. And then we also saw some interesting negative correlation. You expect some negative correlation, obviously, between the rates complex and the equities. What was surprising was where that negative correlation showed up and kind of how weak it was in general. If you were coming to the rates complex for your bastion of inverse correlation, listeners, then I think you were disappointed, with the exception of our old pal 3-month SOFR. That was kind of leading the charge to the negative correlation front. 3-month SOFR versus the S&P 500 coming in at a pretty paltry 0.18, negative 0.18, listeners. So again, if you're banking on that being your negatively correlated asset, negative 0.18 ain't going to do it. And then right above it, we have negative 0.19 for the 3-month SOFR versus NASDAQ. So again, kind of surprising out here, listeners, just what we're seeing out here from an overall correlation perspective, listeners. Now, let's keep going. Let's go out to some other surprise correlations that caught our eye this year, listeners. Bitcoin versus some other products. Bitcoin versus Nat Gas. Both of them having a banger year last year. But the correlation, the positive correlation ends up being only positive 0.12. That's kind of fascinating out there, and might have expected a little bit more given the fact that Bitcoin had a good year and nat gas had a good year, but moving at different times of the year, that probably led to that correlation maybe not exactly shaping up the way you might think. We already talked about Bitcoin versus gold, negative 0.21 for the year. A WTI versus silver, kind of a strange correlation you don't really think of. It's kind of mild, but it's there, 0.27 for the year out there, listeners. Let's keep the theme going of indexes. Let's keep the theme going really of surprise correlations. It's the S&P 500 versus not gold, not silver. How about platinum, listeners? Yep, they moved 0.28 positive correlation between those two for the year. Let's keep rolling other surprise correlations we noticed this year, listeners. How about FX versus metals, but not the shiny stuff? Let's get base. And not the euro, let's go pound. Pound versus copper, listeners. Positive 0.38 correlation for the year. Kind of interesting, kind of head scratching. And then right above it, just a tick above it, listeners, we're going energy versus ags. This time it's a positive 0.39 correlation between heating oil and soybean oil. So the two oils moving, not quite in lockstep, but moving, let's say, in somewhat in tandem throughout the year. And then getting much closer, much higher from a correlation perspective, positive 0.51. It's the euro versus the 10-year. So interesting stuff. FX coming in versus rates. And then, I don't know if you can call this a surprise, but this is really more of just, it's an intra-complex correlation. But these were two names that kept popping up on our radar this year. The two P names, the two P offenders in the metals, palladium versus platinum. They were always on our movers and shakers throughout the year. How do they stack up to each other? Pretty strong, as it turns out, positive 0.66 for palladium versus platinum, listeners. As we keep on rolling, you know, we talked about a lot of trading activity throughout the year, listeners. It's hard to single out just a handful from the massive explosion, the tsunami of paper that we crunched in TWIFO in 2024, listeners. But if you hold a gun to our heads, I suppose we have to go to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the wonderful world of the metals, listeners, because it's a fascinating one. And I think you could probably guess, if I put a gun to your head as well, that metals might be at the top of our complex and our top of our weird trade list for the year, because metals is kind of what they do, isn't it? You know, listeners, if you've listened to this show for a while, that metals are kind of the place we go to if we want some wild, some woolly, just some absolutely mind-boggling paper. And it tends to be lined up to the upside. We used to talk many times about gold and just crazy upside verticals and flies and things that didn't make a lot of sense. Seemed extremely optimistic. It's the gold bugs in action out there. But we're not going to do that. We're not going to do quite that this year. Actually going to kick it off in copper. If you've been listening to the show this year, you probably recall the days I'm talking about here, listeners. We saw a string of some wild trades out here in some interesting products. Not the ones you usually expect, not the usual suspects. Copper. How often do we talk about copper on the show? Not too often, listeners, but it came on our radar back on June 27th for just some weird and wild paper out here. At the time, June 27th, listeners, we talked about copper was right around $4.34. Somebody came in, wasn't even that long term, it was only a 30-day trade, 29 days to be precise, trading the 14.25, I guess you could call it a strangle. 5,300 times. They traded 4,000 times on that Monday, June 24th. They did it 700 more times on Wednesday, June 26th. And they finished it up 600 more times on that Thursday, which was June 27th. So just wild. Yes, those strikes again, 14 to the upside and 0.25. Not even 1. 0.25. And looks like they were opening buys. I don't how you can get a bid for the 0.25 puts. So they bought both of these, listeners. 14 quarter. I guess you could charitably call that a strangle. Is it really a strangle? But that's what it says in the old textbook. They buy both as a strangle, even though that one definitely is a head scratcher. If you're not a copper watcher, listeners, the all-time high for copper, at least as of the time this trade went up, was $5.20, set in May of 2024. Not that long before this trade. Just a month and change. This is meme stock type paper. This is, GameStop going from 15 to 150 in the span of a week and change. That's what this type of paper is seemingly set up to spec on. It's wild. We talked about this jokingly in silver back in the meme stock days. People were prepping for a big silver squeeze that never materialized for a variety of reasons. We talked about that on the show back then. This type of paper, so near dated like this, that's the only thing that could really be. Silver would have to go nearly 3x through its all-time high in the span of, silver, copper. Copper would have to go 3x nearly through its all-time high to make those calls even remotely relevant. Now, we know the deal with VIX. You don't have to get there to make the calls kick up. There could be a little bit of that to play. I haven't really studied the skew dynamics over time in copper, but still, I don't think copper is a VIX where if you get even remotely close, the skew action kicks in and those calls are going to catch a bid. Yeah, just a wild time for this trade, listeners. Again, they traded it for effectively a penny each. So you're not talking a huge outlay. It's more just crazy head scratching. What are you up to? What is the intent behind this trade? Are you worried about? Are you excited about copper going to 14 over the course of the next month? Spoiler alert, didn't happen. Are you also worried about copper blowing through the one handle from about a 4 1/3, getting all the way down to a quarter? And what are you hedging if you buy the quarter put for any amount of money? What are you really locking in? What profits are you protecting at that point? The horse has left the barn. The game is over at the quarter strike. So it's nonsense across the board. It was head scratching to us then. It remains head scratching to us now. And certainly as you look back on the year and the kind of just what the category, that trade certainly stands out. But it was not alone, listeners. It was a weird day, June 27th in the metals, because they did something similar in silver. Again, same show, June 27th. We saw, again, just wild paper going up. Silver at the time, listeners. So back in midsummer, we had silver in the mid 26 range. I want to say around 26 and a half or so at the time of the show, but somewhere in that mid 20s range. We saw the 75 and 12 3/4, I guess you can call this a strangle, going up as well. 75 calls, 5,100 times, so a little bit of a ratio here, against the 12 3/4 puts going up 4,000 times. Now, it wasn't quite 1-to-1 on the same day, so maybe we're reading in a little bit that these were related trades, and we had 1,983 of the 75 calls going up on that Monday, June 24th, versus 3,000 exactly of the 12 3/4 puts. The puts traded another 600 times on Wednesday, actually 500 times each on Wednesday and Thursday, so a total of 4,000 for the week. The 75 calls traded 1,983 on Monday, 1,664 on Tuesday, 803 on Wednesday, and 712 on Thursday. So a total of 5,112 on the week, all of that opening. So again, not quite apples to apples. For example, no puts traded on Tuesday, so they could be separate trades, but it's one of those things where it looks like a duck and it quacks like a duck. It's going up around the exact same time as this very funky copper quote-unquote strangle. And this would seem to be along those same lines, listen. This is another roughly 30-day to go trade. So again, the all-time high for silver, nowhere near that 75 strike. So it seems like we have somebody going into the same playbook and doing something very similar. Again, that doesn't line up 1-to-1, so they could be unrelated, but it is weird that we'd have such similar trades going up in the same week in copper and silver and not at all be related. Again, been doing this for a while. I've learned to be a little bit skeptical about these things. So 75, 12 and 3/4 strangle going up close to 5,000 times each. 4,000 on the puts, 5,100 on the calls. Spoiler alert, those didn't work out either. Yeah, and the annals, looks like they paid a penny for those as well. So in the annals of just nonsense, there you go, listeners. Again, these aren't the biggest outlays, just in terms of head-scratching weirdness. These are definitely at the top of our list. I'm sure as we continue to crunch our data through the year, a few more may percolate up there, but things that leap off the page to us, listeners, is that wild period of midsummer strangles in the metals. All right, and that is going to do it for us on this look back on the wild, weird, and whimsical year that was 2024. What stands out to you, listener? What were some of the trades or trends that really stood out to you from a futures options perspective? Was there a product that surprised you was on the show as much as it was? Was there a product that surprised you that it wasn't? Was there a trade that stands out to you that really resonates to you? Was there a development that you looked at and said, that's strange, I didn't expect that? There were a lot of debates going on this year. Was crude oil going to break 65 and continue to fall out of bed? What was going to go on to the upside in Bitcoin? Where would gold and silver top out to the upside? A lot of things people were obviously looking at, in addition to, of course, all things S&P and everything else. How did this year shake up for you? What are your thoughts? We want to hear from you. Reach out to us at Options on most of the major social media platforms. Questions at theoptionsinsider.com. Also get you to us out there. Hope you had a great year that was 2024. Hope you're kicking off the new year in high style here in 2025. We will be back tomorrow to look back at the mad, the wild, the crazy year that was VOL in 2024. Spoiler alert, there was a lot of it, a lot to parse. We'll be doing that on Vol Views tomorrow, and we're back one final time for the week for all of our pro members, talking the weird year from an options oddities perspective. Spoiler alert, a lot there as well. And we're back again on Monday for the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.